In this video, I'm gonna show you exactly how I'd start my day trading career over if I had to begin from scratch, and how you can follow the same 30-day roadmap to do it step by step. Before I ever reached the point of making $3,000 to $5,000 single profit days, I wasted 5+ years and tens of thousands of dollars. If I'd known the foundations and the processes I'm gonna share with you today, it would have changed everything. Here's the plan. I'm gonna give you a complete 30-day roadmap showing you exactly what to focus on each phase of your first month. We'll start with trading foundations and a simple way to actually understand trading. We'll cover the websites and tools you need to follow this process. Next, I'll show you how I rewired my brain with trading psychology, the single most important element that can make or break your success. After that, we'll go over the simple math behind professional trading and then dive into a crash course on technical analysis and the exact principles I use every day. From there, I'll show you how to build and test your own strategy. And by the end, we'll apply everything in real life market scenarios so you can see it working in real time. So let's talk about the simples of how the markets work. Over here, I have a chart open. Let's not worry about anything else other than just how and why the market goes up and down. This is a representation of the mass psychology and people trading this market. It doesn't matter what you're looking at, but that is what price of these up and down movements represents, of buyers and sellers coming in, of either traders and investors like you and me, or big banks, big hedge funds, algorithms, everyone that is participating in this market. And essentially what causes the price to move down or up over time is the imbalances between buyers and sellers. What caused the market to move down right here was there was a lot more people wanting to sell than buy. And this imbalance pushes the market down. And then eventually it got to a point where that imbalance was filled, and then it flipped and a lot more people started to want to buy. There's a lot more demand in the market. And so that's what pushed this up over time. And these little imbalances, you can see if you zoom more into the chart, will go up and down over time in the smaller points in the market. And this is what volatility is called, these up and down movements. These create, on a smaller time frame, trading opportunities that we'll talk about later. Now, how you make money trading is, let's say this is a stock chart of, let's say, Apple. And down here, it's trading at $100. If we buy 10 shares at $100 and it moves up here to, let's say, 105, and we sell those 10 shares, the amount of profit we'll make is this difference of $5 that it moved up times the 10 shares we purchased. So we will make $50 over that time frame trading. And so this is the whole idea of how you make money trading, is you buy at a certain price and then sell at another price to make that difference. And so this is actually a chart of the S&P 500 futures. And normally over a year of long-term investing, you can expect to get, let's say, 10% return on average long-term investing in the S&P 500. This is your basic safe investment. And so if you took $100, you would get $110 after 1 year. But when it comes to trading, you can take something like that $100 and you can turn it into $300 in a matter of days or weeks or even minutes, depending on your strategy and your time frame that you're trading. But unlike long-term investing, is you can lose all of this $100 in that same time frame as well, compared to if you invest in the overall S&P 500 future stock market. Well, for that $100 to go to zero, the stock market has to go to zero, and you're probably gonna have bigger issues than losing your $100 if that happens. So there's a lot more risk involved, but the reward is higher if, again, you can master some key steps. And so here's a quick example of a trade I took on a 1 minute chart. So it's a lot faster paced. I saw essentially a couple of key factors of why I thought it was important to buy down here, and then I thought the market would reverse up. And then I bet that it would go up, risking $1,700. And then if it goes up here, I make, about $5,000. I think on this trade, I made roughly $4,500 over about 15 minutes. So that's really fast paced. Again, there's trades where I lose essentially that $1,700 in 15 minutes. So that risk is there as well, but the math and strategy over time play out in my favor. And we'll talk about how that works in a minute. But you're not gonna be making that much money right away. It took me years to scale my account to be risking that much at once. When I first started, I was risking $50 a trade. And over time, I scaled and got bigger and bigger. And so what the trading journey looks like as you start out, you're probably gonna be either losing money slowly over time, or you're gonna be break even and really not making that much. Because it's just gonna take time to get used to what you're doing, how trading works, and mastering your strategy and your emotions and psychology that we'll talk about in a second that really make or break your trading. And then eventually what will happen is you will start to find some consistent profitability when you nail down a trading strategy. But because you're trading small size, it's not gonna be that much right away. But don't focus on the money initially. That is what ruins traders. Even me recently, when I sized up to this current size I'm at, I went on an emotional roller coaster spiral and lost a lot of money because I started focusing on the money way too much. I started thinking, holy cow, I can now make $5,000 in 15 minutes. And that really messed with my ability to consistently execute the strategy. But eventually, as you size up, that $10 will start to become $50, $100, $200. And then your equity curve and how much you're making will go parabolic in the essential. It'll be an exponential graph because you're not making $10 anymore. You're now making $100. And then you're making $1,000 per trade. And so that'll slowly happen over time, years potentially, but that's where the real money comes trading. Now, when it comes to what you should actually trade, you can choose anything that you want. But over my years, I trade stocks, options, crypto, Forex, and futures. And what I've realized over time is futures is the best thing to trade if you want to start out with a small account, but still be able to get a lot of leverage. Trading the S&P 500 futures has something like 450 to 500 times leverage, which is insane. But essentially, what it allows you to do is participate in trading where you only need $50 in your account to get started. I would suggest having a little bit more than that, maybe something like 500, because if you lose one trade, you're gonna have to redeposit money. But you can essentially use this $50 to enter in a trade and even be risking less than that, maybe even $20. We'll talk about, and I'll show you some trade examples in a minute here. But what it allows you to do is able to say, hey, I wanna risk $20 in this trade and I will try and triple that and make $60. And so you can start out really small, because again, going back to this journey is in the beginning, you need to just be focusing on learning, because you're gonna lose money most likely, or you're gonna just be break even for a while. You may have streaks where maybe you make money for a week or two, but then you'll give it back up because the market is really, really hard to trade over a long period of time. There's different market cycles that cause you to have to adjust. And if you don't know how to do it because you're not experienced, you'll lose money. Now, when it comes to a trading platform and tools to use, I highly recommend checking out this platform. It's what I've used for over 5 years now for trading futures. It's called NinjaTrader. I'll leave a link for it in the description below, or you can use this QR code. And it's super, super powerful for trading futures. You can easily draw and use any basic charting software you need, but the ability to be able to manage trades super easily by moving up your stop loss, or you're moving around your targets of profit just with a click of a button and a chart, and as well a tool that I have created for it where I can easily have the system tell me how many contracts I need to trade. We'll talk about it in a minute, to risk a certain target and continuously stick to that proper risk is super, super powerful. And the biggest thing is what this will give you access to is your candlestick charts, which are super important for really deep diving into what is going on with the markets and reading the price movements that will really, really help you in the long term. So some quick basics on how to read candlesticks is a green means that the market or the price moved up over that period. You can have a candlestick represent 1 minute, 1 hour, 5 hours, 1 day, 1 week, 1 month. You can have them represent any period of time you want, or even 10 seconds. But what they mean is that this means that the price moved up, and then red means that the price moved down over that period. And so what you can have, let's say this is a 1-day candlestick, where this candlestick right here represents 1 day's worth of market movement. And so you have it to where the day opens up here, the price moves down to here over the day, moves all the way up here, and then comes back here and closes at the end of the day. And so that's showing you the price movement over 1 day. And then on the flip side, the same thing for this, but it's flipped, where the market opened up here, moved up here, sold off, and then closed out here. And so this could represent a day, a minute, or even seconds. And so you can see, if you look at my charts, hopefully it's not too confusing, but I have white for up bars and blue for down bars. This is all about the trading psychology behind seeing red and green bars. They're a lot more jarring or mentally triggering, at least for me. And so that's something I did over time. And so let's talk about some of the trading psychology and how to rewire your brain so you don't go into a losing death spiral like I did recently. And it will hopefully help you save years off of trading and losing a ton of money. This is what can really make or break traders. Even for me, a seasoned trader that knows what to do, I fell into an emotional state, skipped the rules that I know to follow, and lost a ton of money. And so no matter how good your strategy is, if you can't consistently execute it, you're gonna lose money no matter what. Now, a huge thing to avoid when you're first starting out is the idea of a really high win rate strategy. Winning in trading feels really good, but the reality is a lot of strategies have a 40 or 50% win rate, or even less. Generally, I have a smaller win rate because I am risking a smaller amount to make a larger amount. So I don't need every trade to win, because when I'm right, I make a crazy amount of money. And when I lose a lot less. And so you don't need a really high win rate to be consistently making money over time. Losing is a part of trading. Another huge one is being okay being wrong. I had a great, almost perfect looking trade that I entered in a couple days ago, and the market ended up reversing on me and I lost money on the trade. And so losing that, makes you think, oh, well, it was a bad trade, I shouldn't have been in it. But making money on a trade or losing money on a trade doesn't mean it was good or bad. The outcome doesn't necessarily mean it was a good or bad trade. I thought this trade was great. All you can really control when it comes to trading is entering in, and then whatever happens after you enter the trade, if the market decided to go down or it goes up, that's out of your control. And so focus on what you can control when it comes to trading, and realizing that losing isn't a bad thing. High win rate isn't necessarily good. Making money on a trade doesn't necessarily mean it was a good trade, or losing money on a trade doesn't necessarily mean it was a bad trade. The biggest thing you want to do is focus on the process of consistently doing the same thing every time, because that's what you can control. And so when it comes to trading, what you want to be focusing on instead is how much you're risking every time and how much you're looking to make. You want a good risk-reward ratio that is in your favor. That's what I found to be the most important thing over time. And so for me, my current risk-reward ratio is I risk $1,500. I look to make 2 or 3 times that risk, or even sometimes 4. And so if I can risk $1,500 and make $4,500 or $6,000 on a trade, I don't have to be right very often to make money over time. I can lose $1,500 every now and then, because when I'm right, I make a lot of money, and that risk reward is positive over time. And so that's where the trading math will really come in your favor in trading. You can have a ton of losses where you're losing 100 every time, but every now and then when you do win, you're winning way more. And so over time, even though you lost 6 trades and you lost $600, those 3 winners you made 850 bucks. To where your average winner is around 3 times your risk. And so over time, you have a 70% loss rate and a 30% win rate. But over those 10 trades, you made $250. And so that's where the math and the long-term consistency plays out. And so if you get upset over these losses and they derail you, you don't have time to let the math play out in your favor and the strategy's favor. If I go to my chart here on NinjaTrader, I have actually created a tool that allows me to say, okay, if I want to enter in, let's say here, and my stop loss here, I want to, let's say, target $50 of risk every trade. You can see that depending on where I enter in the trade and where I put my stop loss, it'll adjust automatically how many contracts I need to trade. And so this is super easy for targeting a certain amount of risk every time as consistently as possible. If I trade just one contract, I can risk $28 if I entered in here and my stop loss was here. And so you can trade a really small amount and practice this over time. And then it'll show you, okay, if I get out here, 1x, 2x, 3x, and this allows you, and I literally use this every trade to help me know how much I need to enter in on to target my risk. And so I'll leave a link for that in the description as well. And so to quickly jump into a crash course of technical analysis and how to look at a chart and read it, is there are a few key things that I have stuck to over time that help simplify my trading, not make it too complicated so I can focus on consistently executing the same thing over time to help me be consistently profitable, but as well as let's just go over those main things so you kind of know what to focus on when you're trading. And so for me, I realized over time that having a ton of indicators didn't really help. Just looking at the swings over time really became very important for me. And really all I look at is, if you look at the swings in the market, they make your uptrends and your downtrends. And downtrends are signified by lower lows and lower highs, and uptrends are signified by higher highs and higher lows. And looking at those, you can create things like support and resistance off of when there are multiple swings in one area. Based on what we talked about earlier, the supply and demand, anytime the market comes up here, well, sellers really start to outweigh the buyers and they push the market down anytime it comes up to this zone. And so that's how I like to look at this and say, okay, well, when it comes up here, I want to bet that it's going to go down potentially. And when it comes up here, I bet that it's going to go down. And eventually, it'll eventually break because all these levels eventually break in the market. But that's a really key way to help read the market. Another one is a trend line. It's just literally, you can just look at it. It doesn't match the market all the time, but some downtrends in the market are very well matched to a trend line where the market comes up and hits it multiple times. And so every time it comes up to this trend line, you can say, okay, well, I want to, take a trade here and bet that the market's going to go down, risking something like, let's say if you're doing a small account, risking $40 and betting that it's going to go down and making $100. And so that's how you can scale and trade over time. And then the biggest indicator that honestly grounds all of my trades and I use for every trade I take is if we go to most NinjaTrader has this and a lot of other platforms will as well, is if you just type in fair value gap indicator and turn it on, what it will do is it will draw these boxes. And what these boxes essentially mean is the market has had an unhealthy move. And so in the market, you have a move up generally has pullbacks in it. And because of that, it helps balance the buyers and sellers. But you can see here, this is a great example we recently had, is the market here sold off really hard. You can see made these red boxes for saying that it was having an unhealthy trend to the downside. And because of that, once that trend kind of slowed down, started to get choppy here, it reversed higher. And this is where something like me, I would come in and I would say, okay, I really like this signal. It's overextended. It's come into, let's say, a support zone where I think it's going to go up. And I would pull up my drawing tool of my risk reward tool and say, okay, I want to bet in when the market breaks up here. You know, as I'm seeing this pullback, and then I put my stop below this swing because I like using the swings in the market. And then I would ride the move up and I would capture, you know, in this case, if you went for 3X on this trade, you'd make 150 bucks, risking $50. And so that's how you can trade the market effectively, by looking for patterns like this. Now, this is an extremely oversimplification of this. I have tutorials that dive way more into technical analysis and reading charts. I'll link a video up here. But what you want to be doing is creating a trading plan for yourself. Now, I've got a 90-day trader roadmap PDF guide that lays out a ton of this that you can download for free using the link below or this QR code. But to go into some nuts and bolts of that right now, what you want for your rough trading plan to really try and make trading a business, because you need to treat it like a business. If you treat trading like gambling, which a lot of people do, you will end up losing your money. And so first, what you want to do to build this foundation is you want to learn a bunch of different strategies. You want to find a strategy that you find feels simple and fits your trading personality and how you want to trade, if that's trading a 1 minute or a daily chart. But then next, you want to create a document that has your rules laid out. You want to write this down, and you're essentially your plan of what you're doing going into every single day. What I do is I show up right before the US stock market opens, and then I look for a few key factors of big momentum moves that happen in the first 30 to 60 minutes in the morning. And then if I see a move like that, and if it aligns up with my rules that I've set, that's when I enter in on a trade and bet that the market is going to go higher, and I look to take a profitable trade based on that. And if I don't see those factors show up, I don't take a trade. I do not stick around looking at the charts all day trying to capture every move that the market has. What has worked for me over time is sticking to something very, very simple and repeatable. From there, once you have made your strategy and rough plan, open a demo account on NinjaTrader and start practicing it. I highly recommend that you demo trade without real money first. There's going to be a lot of stuff going on in the market that just learning to read the market and look at what's happening is really, really hard over time. I mean, just looking at this morning, I didn't take that trade this morning because if you can see, the market opened up here and it just sat here and chopped around for 2.5 hours. Eventually it got moving, but those first 2.5 hours, if you're not used to being able to recognize that, you could lose a lot of money. And so learning to go with the different swings and moves that the market has takes time. So to dive more into my strategy and futures and how they work, check out this video right here. It'll lay out everything that you need to know about reading charts, mastering futures, and executing a consistent strategy every day in the market.